Hello and welcome to a special bonus edition of Darwin Investors. Okay, there are no coincidences in the stock market. Everything is happening for a reason. And in absence of some sort of mass movement on social media to energize some small stock, the big banks are totally in control of this entire market with respect to options activity, and we're at their mercy. It is absolutely not an even playing field. That's why we, as small stock market fish, it's important that we understand that we have to take quick profits before they take the money away from us. Now, I put out a lot of these videos showing you how to do, how to sell options and try and generate a little bit of extra money. So I feel like a little bit of responsibility to show you exactly how this game is rigged. So let me go ahead and show you that. So yesterday, JEPI finished the day at $55.01. Now, this wasn't really an accident, or it was a little bit of an accident. I think whoever the big market maker is that was selling the call on this underlying equity would have preferred it finish at $54.99 so that they could hang on all to their stock and not have to give up any of their premium. However, whoever is sitting in the chair and accidentally had this thing go up to 55.01 isn't in any kind of trouble, because they're going to buy back this option for a whole lot less money than what they sold the option for. So let's talk about why the big bank would not want to let go of these JEPI shares. So JEPI pays a very large dividend, and it's paid out monthly, and the annual distribution yield is 11.68%. So whoever has these shares doesn't want to let them go. What they really want is the options money, and they want the big dividend that comes with it every month. Let's see how much they would have to pay to get this back relative to what they sold it for. So if we're going to sell a covered call on JEPI with a February expiration date. Now, these things expire monthly, and the January expiration was yesterday. Yesterday was the day to pay out the options. That's why it finished here at $55.01. Like I said, ideally they would have preferred $54.99, but this is not going to get anyone in trouble, and let me show you why. If I was to sell an option right now on JEPI, and it had an expiration date of 17 February with a strike price of $55, so this is an at the money covered call, someone would give me 53 cents or $53 per contract for JEPI with a February 17th expiration date. Now, if I do this and then on February 17th, I have to buy each one back for 1 penny, then I still make $52 per contract. So whoever did this is not in any kind of trouble. They did pretty well, actually. I think they did their job very nicely. But we wouldn't generally sell something like JEPI at the money. Like if I'm going to sell my covered calls on JEPI, I'm going to sell them further out of the money. So let's say I do, instead of $55, I would say I want $56. And $56 is going to be my strike price that with the expiration of the February 17th. Now there's a bid and there's an ask. I'm not allowed to ask for 13 cents or $13 per contract, because if I do something like that, it's going to say this option is trading in decimals. Acceptable prices are in multiples of 5 cents below $3. For example, 5 cents, 30 cents, $1.65. I can't sell a contract for 13 cents a share or $13 a contract. I either have to sell it for $10 a contract or $15 a contract. Now, this is the bid and this is the ask. No one will ever pay the 15 cents. The only way for me to sell this is to sell this for 10 cents. Unless it goes up, and then the bid would be 15 cents, mid would be 17, and the ask would be 20. And that's actually what I did this past week. But you run the risk of selling something for 10 cents, and then you have to buy it back for 15 cents. Because if I say I want to buy this contract back, and I only want to buy it for 10 cents or $10 a contract, and the midpoint is 13 cents or $13 a contract, nobody's going to buy this back from me. So the only way for me to get out of this, if I wanted to, would be buy it back for 15 cents, even if I only sold it for 10 cents. And that's kind of like the little bit of trap you get caught in dealing with these very unvolatile stocks, or in this case, an ETF. Now, in my case for JEPI, I wasn't part of that game. I didn't have the $55 strike price. My strike price was $56. So I sold 19 contracts for essentially 16 cents a piece, but really it was 15 cents a piece. And so I sold 19 of those and I collected $291 for my contracts. I just let it run to expiration because the expiration date was yesterday with a $56 strike price, and it finished at $55, meaning that this finished out of the money. This was my covered call, so I got to keep my shares and this money, and I also get to collect that dividend that's going to come to me in about a week and a half, which is ultimately what the big market players want. They want to be able to get that dividend and keep these shares and keep that premium. That's really what they want. They're tripling up on JEPI is what they're doing. Now you can see that it finished at 55.01. Now, if I was to buy this back, I couldn't pay 1 cent. Remember, I can only pay in multiples of 5 cents. So if I sold it for 15 cents, I would have to buy it back for 5 cents. Even like right here, right before the bell, when it's only worth 50 cents, I still have to pay 5 because it doesn't trade in multiples any less than a nickel per contract. Now, that's what I would have to pay. The person that sold this and is buying it back at some big bank, what do you think they're paying? They're paying 1 cent per, or $1 per contract. They're not paying 5 like I have to pay. I'm sure that they're well connected over there at Goldman Sachs and JP Morgan and the like, and they're buying this back for 1. They're selling it for 53 and they're buying it back for 1. So whoever did this did a fantastic job making their company a lot of money. Now, on the topic of Goldman Sachs, here's another way that Goldman Sachs was manipulated. I saw this just yesterday. So Goldman Sachs, this story came out. Remember, there are no coincidences when it comes to the stock market. This happened, it was timely, and this was on purpose. So yesterday, Goldman Sachs, if you look at it right here, it got clobbered at about 11:30 a.m. A story came out, and the story was that the Fed is investigating its markets business. Like basically it has some sort of like retail trading type of business that the Fed is now investigating. And they decided to break this story just 4 hours before the market closes on a Friday. And so this is not a coincidence. And so when they broke this story, it caused this stock to go from $351 to $352.10 all the way down to $38. So I'm guessing what happened is there's some large market maker out there. You watch Wall Street, that Gordon Gekko, that stuff is real. Nothing is a coincidence. So I'm sure what he did was hear about, Gordon did, about 11:55 or so, or 11, about 11:25, you probably bought a whole bunch of puts on Goldman Sachs with the strike price of $342.50 or something along those lines. And I'm going to use that number because I had $342.50. And so I can tell you how much money they made on this thing. And so what happened was they bought a whole bunch of puts here, and then the story broke. And then, so they bought the puts for like nothing, because remember, it's 4 hours before the market closes. So they buy the puts for next to nothing, or in this case, $5. And so they buy it for next to nothing, and then the story comes out, and all of a sudden, all these puts are worth a fortune. And not only that, they're $4 in the money. And so now they're going to sell all these puts, setting the market back up. They bought them all, then they're going to sell them all back to the market, to these people that are panicking. And then they made all this money on the way up. And so how do I get out of this? How did I escape it? Well, let me go ahead and show you what I did with Goldman Sachs yesterday. So I had Goldman Sachs, and I had an option on it. You can see that I sold it with a $342.50 strike. And it was going to expire yesterday, and I sold it for $93. I bought it back for $5. So I know that they could buy those puts for $5 a piece. And then when this thing sinks to like 336 or $338, whatever that was, these things are suddenly $4.50 in the money. So instead of being worth $5 they paid for it, they're worth like $500 a piece. And then so they buy them for 5 and then they sold them for 500 and a whole bunch of them. And that's the way that this market is manipulated. So knowing that it's manipulated, it's very important for you to go and take the money when you can get it. So rather than just paying or selling this for $93 and having to buy it back for say like $120, I took the money early. I don't need the other $5. Let's just grab that money. As a matter of fact, I would have sold it for like $87. I would have sold it for like with and only netted like $87, even $85. Just take the money, get out of the market, because believe me, this thing is rigged against us. So that's going to do it for this video. It's really quick, but I just thought it was important to show people how the stock market with respect to options is very much rigged against the small fish, the retail investor, unless they're all banded together like on Reddit or something like that. And I wanted to be able to show how the bid ask is kind of rigged against us as well. Like I am forced to sell something for 10 that I have to buy back for 15 because I'm just not capable. It won't allow me to buy something back for like 13 cents, right? It's not going to happen. So if I get stuck in a situation, it's very realistic for me to have to buy my way out of it for more than I was paid to get into it. Even if the stock or the equity or the underlying ETF or whatever is at the same exact price as what I sold it for, I may still have to buy it back at a higher price. All right. Well, I hope you got something out of this. I was going to tack this on the end of yesterday's video, but I'm just respecting people's time, trying to make these videos shorter. And I just felt like a little sense of responsibility to try and show people exactly how this market is kind of rigged against you and how you can actually make money in this market, but you just have to understand the rules and they're not in your favor. Let's put it that way. All right. Thanks a lot. Have a great day. Oh, please like, subscribe, and hit that notification bell, and have a great day, y'all. Bye.